Today is Wednesday, the 8th of April, 2009. This is Brian Shannon from Alpha Trends, and you got to be impressed with the strength of this market, the resilience that is. A lot of people have been looking for the top of this rally, and it just hasn't really shown any reason to get aggressively short yet. We see that the market is holding above this prior level of resistance. It did dip below there briefly yesterday, but came down, touched upon that rising 10-day moving average, and here we see now that I've got an alarm going off in the background, but here we can see that the market has rise back above that prior level of resistance, and again did hold that rising 10-day moving average, which is above the 20 and above the 50-day moving averages. It's still very difficult to trust this market because of the longer term downtrend that we remain in. But when we look at the weekly time frame, you can see that this level, if we can close above here, then I think that's going to embolden more people. But again, it's tough to trust. You have to remember that money management is the most important thing in here. We can take a look at what looks like the most relevant trend line in here right now. A couple days ago, I was saying that breaking below this level might set up a bull trap. In other words, if this area fails to hold and we break below it, then we could have trapped the buyers up there, and we could be looking for a stronger reversal. We've still got a rising 5-day moving average, and generally want to give the benefit of the doubt to the buyers in there. But I think that right now this level, basically yesterday's lows near about 31.20 or so, will be the more important level. We do have a slight pattern of lower highs in here, but we are again consolidating on the daily time frame, and it's possible we could be making a push up for, let's say the election highs or maybe that 200-day moving average. There's still a lot of doubters in this rally, and as long as the sentiment remains so negative, the market likes to confuse the majority of people. So perhaps we can see a little bit further strength in here. When we drill down to a 10-minute time frame, you can see that we did drop yesterday below that 5-day moving average, but recovered towards the end of the day. And today's gap higher and subsequent strength is really what kind of put it back into the little bit more control from the buyers. But this level, again, this is going to be the level that I'm going to be keeping better track of, which is about $31.20. Failure to hold that level, then we can look at this bull trap scenario once again, maybe come down towards that trend line in there. If we take a look at the volume weighted average price since this rally began, with the gap higher right here, we can see the average price is around 30, so that continues to rise. We have more people in here winning position. If you take a look at the average price since the beginning of the year, it's way down at about 29 and a half or so, and even from the low, let's say from the October lows, same place. So we've built maybe a pretty good little foundation in here. I'd still like to see a deeper pullback, maybe towards the 20-day moving average. But again, you have to be impressed and trade what you see. There's still a lot of great looking stocks out there. It was impressive to see stocks like Mosaic Company recover from earnings, and I don't know if it was them or Potash, but one of these guys reported earnings. They gap much lower and just continued higher throughout the day. Potash is another one that did the same exact thing, and these are pretty big speculative names. So it's good to see that so far earnings aren't crushing these stocks. We're at the beginning of earnings season, so that's going to play a much bigger role here in the coming weeks. So obviously, you're going to have to keep an eye on the individual names and see, realize that there's risk specific to the companies you're trading. Based on earnings due, coming out. So be sure to be checking for those earnings dates. The Russell 2000 does remain above the lows from January, which is impressive. If we take a look at the average price that the Russell's traded at this year, you can see it's right about that same exact level that we had seen the January lows, which is kind of interesting. But anyways, that level takes on a little bit further significance because that's about $43. We do see in here a rising 10, 20, and 50-day moving average as well. We had a little bit deeper pullback in the Russell 2000. So I like to see those little deeper pullbacks because it tells me we might have cleaned the market out a little bit. The average price since this market began the rally on March 10th is right there now, still rising at about 41.59. The more important trend line looks to be right in here, and that's right about the level of yesterday's low as well. So keep an eye in here on about that 43 area, breaking 43. You still see we do have these lower highs, maybe going to get past a little bit of resistance and back above that 5-day moving average. So I think 44 and a half or so, if we can get above and hold above there, that breaks this little downtrend line here in the short term. It'll give us a higher low to complement the it'll give us a higher high to complement this higher low we'd seen this afternoon, but still not a reason to be overly excited on the long side. We've expended a lot of energy getting to where we are, and a correction time-wise would be very healthy for this market because it would also allow stocks to kind of trade a little bit more on an individualized basis. The financials also continue to hold up very well. They're not giving any ground, and we do see higher lows in here. $9.75 is a level that is where we've seen selling in here recently, and it remains a level of focus for a lot of people. We have broken this. We have not actually. I'm sorry. We're still trapped below this trend line. So maybe breaking that trend line, and we could see that as early as tomorrow. I think if we break below that trend line, we could look at that on a let me see that. Well, I can't do it on that time frame. Never mind. But if we break that trend line, that might be the catalyst that gets enough people to get excited to push it up through the 975 level, and getting above 975. Just because we have these higher lows and we're testing this resistance more frequently could lead to a pretty good rally. It's still a broken group, a lot of problems, headline risk, and that sort of thing. But near term, we need to see. I think that trend line probably comes in at about, let's just say 950 or so. Then that puts 975 within reach. The more important level of support right now, I think, is going to be breaking below $9 a share. That is today's lows. If we break below there, then this 5-day moving average flattens out, starts to turn lower, and we could have bigger problems. But it just feels like this market doesn't want to go lower. 2,200 stocks up today, 770 down. So very good breadth overall as far as broad participation in the market goes. We are below the 5-day moving average. So I think before you get excited about the bullish scenario in financials, 940, 950 needs to be taken out. But then of course the bigger level being that 975. And breaking below $9, I would be very careful with this group. The S&P 500, let's take a look at that finally. The spiders were up about 1% here today. We do have a rising 10, 20, and 50-day moving average. The market came down and held that 10-day moving average yesterday. Today it also held above it once again. If we look at the 30-minute time frame, we've got a little bit of resistance in here. It looks like at about 83. That's our first level. If we zoom in on that, well, let's take a look at the VWAP in here as well. The volume weighted average price since this move has begun is right now at about $79 a share. So buyers still remain in control for the better course, obviously, of a month here since this rally began. And on the 10-minute time frame, this is going to be today's lows and yesterday's lows right in here. This is a more important level of support, about $81.40. Breaking below that and holding below it for about 5 or 10 minutes, I think we could see further selling pressure come in. We're below the 5-day moving average, but it still has a rising slope to it, so we're gonna have to see at least again that 83 level taken out. If 83 level gets taken out, then we're probably going to be looking at a move back up towards 84 and a half, 85, and that's this level right in here. That'll give us another higher high to complement these higher lows that we're seeing in here, and perhaps we would make a run up towards this 87.80. Again, the market remains somewhat extended to the upside. I think that these levels, the lows of the last 2 days, are going to be very important here for the next couple of sessions. And again, we've got the market closed on Friday, and tomorrow So we've got 2 more days left this week, but we've got a holiday Friday as well. So go slow, manage risk. There's a lot of good individual stock trade setups. This TSL, by the way, looks really just super poised to me. LDK went late in the day here. LDK, which is another solar, had a real nice bar here on the 30-minute time frame, and this TSL really looks like it's if we take a look at the daily time frame, really set up very nicely in here. It's had big volume on this rally up, low volume consolidation above the rising 10-day moving average, and it really probably needs to take out about 1265 or so. Then it might make a run up for that 200-day moving average up near the 200 near this prior resistance as well.